Alright everyone, Cowboy Trades here, back with another update on Bitcoin. So this has been one of the most eventful weeks for Bitcoin this entire year, if not the most eventful week. There's tons to talk about. I know all of you want an update on the Bitcoin TA, on-chain metrics, people are asking me for Sol updates, KDA, what are my new price targets for altcoins, where does Bitcoin bottom? I'm going to break down a lot of these subjects into some short form videos for you, just to get these points across very, very easily. So let's dive into some of the on-chain metrics which I'm still using and have helped us call for this final leg to the downside. Now, there are some charts we can throw in the bin. I didn't even really want to show this one because I feel like every Bitcoin is about to become anti-LGBTQ, but as you can see, the Bitcoin logarithmic rainbow price chart indicator, magical rainbow to infinity, right, has broken to the downside. Very, very ugly right now. Also, stock to flow model, things like this, Bitcoin logarithmic growth curves in general are becoming the most deviated to the downside they've ever been. So what are some of these on-chain metrics which I'm still going to be looking at and, like I said, have helped us call for this bottom? Well, first of all, following the smart money and doing the opposite of retail money is one of the best ways to do this. So let's look at the whale shadows. This shows us, well, you can look at 5 to 7 year wallets, 4 to 5, 7 to 9 and 10 year plus wallets. I'm going to show you what the whales are doing that have been holding for more than 7 to 9 years and 10 plus years. These are the most important ones. So if we do zoom into the price action right now, you can see on the 11th, yesterday, almost 4,000 Bitcoin was outflowed while these markets were in panic. On the 2nd of November, 1,000 Bitcoin was sold from some 10-year wallets. The next day, no, this was 2 days later on the 4th, about 600 Bitcoin outflowed from some of these OG wallets, and you've got little bits every now and then. What I really wanted to focus on was, that large 4,000 Bitcoin outflow. This is one of the largest outflows that we've ever seen. Obviously, in terms of 10-year wallets, you have to be here for a very long time. I do believe this is the largest 10-year outflow that we've ever seen. So typically, when these pink and orange lines spike to the upside, it's not good for price action. These people hold a lot of weight in the market, and when you can see, when these exuberant spikes to the upside happen, often it correlates to a top. Over here, whales were selling just before the final capitulation. Whales were selling into this capitulation as well, and then literally right at the exact top, they were selling here. You can see on this peak over here, large whale outflows. You can see on this peak here, as we were just breaking down, to be honest, large whale outflows. And right now, as we're breaking down further, what are some of these OG wallets doing? Well, they are currently selling. Let's head over to the realized price. Very simple, very quickly. Realized price tells us the average cost basis at which people have gotten into Bitcoin. So you can imagine when you're above this orange line, the realized price, you're in profit because you've bought. Your average price buy-in is beneath the price that Bitcoin's at right now, so you'd be in profit. And as you can see, in these bear market capitulation times, we go beneath the orange line. The average Joe is in capitulation territory. They start selling, they start panicking, and we haven't really, if we zoom in, we haven't really seen a capitulation this nasty since, Bitcoin was in its early, first bear market cycle back in 2011. You can really eyeball this over and kind of see what happened in 2014, 2015, 2018. You can see, we pretty quickly dropped beneath the realized price. Didn't really spend too much time. And if we did drop beneath it, we accumulated just beneath it for a little while and then just boom back above it. But we were kind of accumulating on/beneath it, and then we rocketed to the downside as well, which kind of reminds me a little bit of what happened over here in 2011. So, potentially we could be having a bounce coming in the next month or so before one final leg to the downside. But realized price, really just wanted to show you that a lot of people are underwater right now, probably in panic mode. This is why we're seeing a lot of exchanges go bankrupt. I mean, when there's tons of liquidity flowing in, they can of course, afford to have not so little reserves because people are constantly buying, depositing crypto. But now when these markets are really liquid, and we've been looking at these with the Chicago Mercantile Exchange futures, boring stuff with the stock market, liquidity is decreasing, financial conditions are getting tough, and this is why, we're starting to see a lot of chain effects happen. Like, I don't know if any of you have ever studied economics, but when one big bank goes bust, a lot of small banks underneath it go bust as well. So, with FTX FTX going bankrupt, and then, the day after that, or the same day rather, we saw BlockFi stopping, the withdrawal transactions. So there's just a lot of stuff going on right now, and, how is retail reacting to this this bearish market? Well, they've been doing what they've been doing the entire bear market, which is accumulating since really, really expensive prices. But what's interesting is if we look at what retail has really been doing, they weren't getting too involved in this most recent cycle. Sure, there was retail there. You can clearly see, these retail wallets were growing over time. But what I really do want to show is, they sold just before the actual run to the upside, and then they started buying in as the price went to the upside. They didn't really accumulate further, when Bitcoin was at 17k, 23k, 30k, 40k. They didn't accumulate at all. And then, they started dropping off and selling, into the final capitulation, really, or at least the first final capitulation. And then after then, they started accumulating. Since about 29,000, they've been very aggressively accumulating. Actually, since right here, 40,000. Since 40,000 right here, they've been very aggressively accumulating to the upside. And we obviously know now that was not a good idea. That was not a smart idea. Right now, price is plummeting to the downside, and retail is buying the dip. What does smart money, what do whales think about this dip right now? We've been doing the opposite of what retail's been doing, and we've been following whales. We've been following the institutional monies, the smart monies, and we've done a good job of navigating this market. So once again, let's look at what the wallets which are holding more than 1,000 Bitcoin are doing. And once again, we know that this was a whale to institutional driven cycle, because when we look at what retail was doing during this entire bull run that has obviously just passed now, they weren't really getting too aggressive in, buying up this market. But you come over to the whale wallets, they were drastically buying. And then you can basically see, when price started topping out for 63k, they started absolutely selling and running for the hills. They did start buying a little bit cheaper, around about 38k. We talked about this before. A lot of economic conditions changed, and then they have been selling to the downside ever since. So what do I want to update you on in terms of the Bitcoin wallets that hold more than 1,000 Bitcoin? Because once again, these are smart monies, institutions. They know what they're doing. They've got a lot of capital, and a lot of the time, markets move with them. As you can see, the last time we updated this, I think we were down here at round about 2,110 wallets. At this moment in time, a couple of more wallets have outflowed enough that they have decreased in a wallet size. So we have now got new lows in terms of the Bitcoin wallet sizes that hold, or rather, we've got new lows in terms of Bitcoin wallets that hold more than 1,000 Bitcoin. So a lot of the whales, institutional money, is sitting on the sidelines. Another great way of kind of tying these two charts together. Over here you can see what retail's doing. Over here you can see what institutions doing. And over here, when we come over to the Bitcoin ratio of retail to institutional addresses, so this is simply the summation of all of retail addresses divided by the summation of all institutional addresses. This gives us this blue line, once again, retail to institutional addresses ratio. If we zoom in, once again proving my point, you can see when this bull market was happening in 2020, 2021, the blue ratio started to heavily decrease to the downside, meaning that less retail was involved in comparison to institution. You have to remember it's in comparison because this is a ratio. So simply put, either retail was getting out of the market and institutions were just kind of staying there, or retail was accumulating but institutions were accumulating more, which is, as we can see over here in this chart, the case that we do know to be true. Now, since then, when did they really start getting out of these markets? Well, when Bitcoin started topping around about this 60,000 region, literally around about February the 1st, local top, you can see the ratio started to rocket to the upside, and it has been continuing to the upside after Bitcoin put in its double top and its all-time high. Ever since then, this ratio has been dramatically increasing to the upside, signifying to us that in terms of, who is in these markets right now, who's interested in these markets? Retail traders. Retail traders are continuing to accumulate. Institutional addresses, whales, they're sitting on the sidelines waiting for lower lows. Let's move on to some other very quick metrics before we wrap up this video. Bitcoin Fear and Greed Index is down at 21. Now, what I really want to talk about in terms of the Fear and Greed is a very, very simple way of looking at the markets. And this ties into, what I always say, do the opposite of retail traders. Now, while retail traders are accumulating right now, a lot of them are in mass panic and mass fear, as you can tell by, crypto YouTube sentiment, crypto Twitter sentiment, fear and greed index. No matter what you're looking at, you can clearly see there's a lot of fear in the market. But here's why, if you're thinking about this logically, it doesn't make sense. We were in euphoria over here. All the Bitcoin bulls were happy to buy at 69,000. They were happy to buy the dip down here at 42,000. They were happy to buy the dip at 33,000. They were happy to buy, just before 50,000, thinking it was going to be breaking out. As we broke back down to the lows, they were happy to buy at 33. They were happy to buy at 25. They were happy to buy at 32. They were happy to buy the lows at 17,600. They were happy to buy at 25k, 18k, 19k, 21,500. They were very happy, greedy, not fearful whatsoever of buying at these high prices. But when Bitcoin comes down to these cheap prices, once again, you can zoom out. I'm not saying that the bottom is in. I do not think the bottom is in. But you can clearly eyeball these charts and you can see the best time to buy is when you are in these capitulation territories. I do really want to emphasize, I think this capitulation has just started, and I think we've got at least a couple of weeks, a month ahead of more bloodshed to come into these markets. If we bottom straight away, if we have a bounce and then come down and make a lower low, at this point it doesn't matter too much to me. I have started DCAing in at 17, 16. I do hope we come down to 15, 14, 13, 12, 11, 10. I'm very happy to buy at these ranges. In fact, I'm starting to get a little bit greedy at these ranges. I'm very happy to take Bitcoin out of people's hands at these ranges. So you could say, while there's a lot of fear in the markets right now, I'm starting to feel greed. But when there was greed in the markets at all of these different ranges, I was fearful. If you were watching my channel, I was saying, if you're buying here, this is scary. You shouldn't be buying here. This is overextended. This is overextended. We're going lower. This is not the time to buy. And everyone's happy to buy here, but they're scared to buy down here. Think about it logically. Once again, I know all of you who watch my channel are probably a little bit smarter than the average retail trader, and subsequently, I hope you can really see that now is not the time to be panicking. Now is the time to sit on the sidelines, because obviously if you've been watching my channel, I hope you have had a plan like we've been talking about. Make a plan, stick to your guns. That's exactly what we did. We've been talking about this for ages, and my plan is finally coming into fruition. There's no deviating from it. Now I'm going to wrap up the video here. I normally do talk about some stock market on-chain metrics like liquidity conditions, but right now, as you can see, Bitcoin in orange and the stock market in these Japanese candlesticks, the stock market is diverging from what Bitcoin's doing. Obviously, the stock market's rallying on some lower than anticipated inflation results, so it looks like we should be coming up for the stock market and breaking down at some point soon. But right now, while these are moving so inversely correlated, I'm going to talk about these in a separate subject. So like I said, wrapping up the video here, I know everyone wants my KDA update. Now KDA's finally come down to my $1 price target, as the same with Sol as well. I mean, we came down to about $12.50. I've been calling for $10. We're really close to a lot of my bear market low price targets. I'm going to update you about all of these in a separate video. So for now, cowboys, that's all I've got. See you a little bit later on. Cowboy out. Peace.